Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, Paris milling wheat. The key pattern here, unlike the American markets, continues to be the purple highlighted mid-March to mid-May shallowy bearish shift pitchfork. The market right now just below the purple middle time, currently at 189 3/4. This bearish shift pitchfork continues to be an excellent indicator of the market's overall bearishness, despite what seems like some sideways action throughout December. The most recent effort has seen prices press down through the support that stretches from March 2021 low at 191 3/4 down to the congestion at 187 1/4, making a new low not seen since early September 2020. However, so far the market has still not managed to stabilize down there. Though the overhead bearish pressure of the green short medium moving average, which is currently at 192 1/4, and probably the better bearish pressure of the declining mauve medium moving average, currently 193 1/4, have capped prices well. Looking below, the March 24 and September 25 lows at 187 3/4, the market has, as I said 13 weeks ago, and I quote, "We don't seem to have anything that significant support until the August 2020 low at 176 1/4 area." End of quote. Thus, we are at the end of a significant support zone. So it is not surprising to see some small hesitation here ahead of a possible quite large jump lower. Yet I would ask you to consider one final thing. 2 weeks ago, the market made a weekly key reversal down, if only just. I said at the time, and I quote, "I'll be interesting to see how the market deals with that factor next week." It'll be interesting to see how the market deals with that factor next week. And that's the end of the quote. Well, the market last week had a reactionary session back up, but not too far and not too hard, nor was it sustained, as we are back down resting on that 187 3/4 support for the last 3 days. So the onus is still on the downside. What we should note is that the purple middle time reaches the 187 3/4 support at the start of the week of the 12th of January. So watch out carefully between now and then, and especially as we get closer, and watch out for false breaks always. Minneapolis wheat. The market here seems to be held to the sway of 2, possibly 3 features, and it's different in so many ways from Chicago and Kansas City wheat. The first feature is the bright red May to July head and shoulders top neckline, which is currently at 563 1/4. This neckline had not acted as a cap, but more as an attractor to the market until very recently, and had been pressuring prices lower. Now, adjacent to this for some time had been the green short medium moving average, currently at 576 1/4, which had been a bearish pressure until 5 weeks ago, when it in parts started to become a support, and in parts a more recent attractor. I said 4 weeks ago, and I quote, "Part of me can't decide if it has been the green short medium moving average or the bright red neckline that had been leaning the market lower, but I guess we'll soon see, as they are both now started to separate." End of quote. Well, the separation seems to have caused both to fail as immediate bearish pressures. Not far below now, we have the dark blue September 2019 to date uptrend, currently at 568 even. This one has been realigned so many times, but it finally seems to have found its groove here as support. There is a larger pattern which I would draw your attention to once more. I spoke about this pattern 16 weeks ago, and I have done ever since, when I said, and I quote, "We're also possibly on the threshold of a really big pattern, a December 2024 to date possible cat's ears pattern. This is a bearish pattern, but the discussion for this, which I've postponed for a couple of weeks, may be coming up, and real soon, as we are about to trigger the downside opportunities for such a pattern. It is a longer term pattern, but I urge you to keep remembering this idea, as if we travel and stabilize a little lower than where we are, I may feel obliged to deploy it, along with all its ramifications. End of quote. Now, I still stand by this, and I've watched the developments around the gapping action in September and late October's and early November's moves once more towards the lows of September with great interest. Despite all these actions, even now we are still reasonably close to triggering this pattern, though not quite there. And this is where the two other factors may play a crucial role. The first of these is the bearish pressure of the declining mauve medium moving average, currently at 580.5. This doesn't have pedigree in pressing the market lower, but it's still, nevertheless, still sitting there until this week, and especially yesterday when we had our first close over it since July. Now, one close over does not make a trend, but it is worth noting, especially as we seem today to be utilizing it as a base for a further attempt higher. The second is a little higher up, and this one does have pedigree. It is the purple July 23 to date downtrend, currently at 584 even. This downtrend impacted the market back in late June and again in early July, and capped the market back then with a head and shoulders top. However, in all those times we did not have a single close over it, though some came close. We may very well have a close over this purple downtrend today, so watch out. As I said last week, and I quote, I suspect that downtrend will be key on any attempted moves higher, and most interesting of all, the purple downtrend crosses the dark blue uptrend in late January. I do not think we'll have to wait until then to find out the result, but I caution you on possible false breaks before the crossover. End of quote. So what should we look for next on the upside? Well, the obvious choices are the 590 area and the now flatlining gold long moving average, which is currently at 598 and 1/4. Both these would be a nice topping bearish pressure for a smaller or a larger rectangle pattern or patterns. London UK feed week. Okay, so there had been on this daily chart until early July and running for around a year, one major significant pattern here, a pattern that we have not seen in the other grain markets, and a pattern I still have on my daily chart because of its longevity and its earlier defining of the market. And as the pattern is the bright red late May to early July 2024 bearish shift pitch fall. In early July, due to changeover, we had a very large gapping move higher, up and out of this pattern, up beyond the now broken bright red upper time, currently at 157.05. Now, added to this upper time back then, we had higher up the important, even today, the important 50% absolute Fibonacci line at 180.5. And you had there, and even now still have an area overhead that is a significant resistance, as it capped the market on its rise back in July with some added nearby help at the time from the purple July 23 to date downtrend, which is currently at 176.30. Since that peak, we've seen prices lower, moving eventually below all the moving averages and penetrating, but eventually not pushing back below the previously mentioned bright red broken upper time. For a while we saw the market happy to slide along the top side of the bright red upper time until parting company in early November. However, what is more important here, and this is key, is that we are establishing the market longer term, establishing the market below the very important dark blue neckline extension on my daily chart, currently 168.55. Please remember that level, 168.55, a neckline to a pair of very long-term patterns, which I will shortly detail. I also drew some weeks ago a bright green late January to mid-July quite shallow bearish shift pitch hawk to hopefully show the newer bearish angle of attack. In this pattern, the market is in between the bright green upper time above, currently at 176.55, and the bright green middle time below, currently at 153.90. To be honest, I really don't think this pattern adds much to the conversation right now. This all leads me to some of my final points. Some of them are the same points I've been discussing here for months, and some of them were something that I noted back in my annual commentary in January this year on London UK Feed Week. Now, before we look at those, I just want you to bear one thing in mind. We have the possibility this week of a weekly key reversal, possibly a weekly key reversal up. It will depend on the close today. If it's anywhere near what happened yesterday, then the previous weeks will have a weekly key reversal up, but it's not set yet, and it'll only be just if it is. So just be calm and be aware of that. Anyway, to see these longer term patterns I was talking about, it's best if we switch to my longer term monthly charts. Firstly, I saw back then the potential for a very large May 23 to date cat's ears pattern. Now this is a bearish pattern, akin to a double top formed after a big fall, such as the fall we had in early 2023. As well as this, we have an even longer term second pattern, an August 2020 to date very large head and shoulders top pattern. These two super long term patterns both rely on one single feature, and that is their common neckline, highlighted in purple on my monthly chart. And that's currently 168.55. That level I spoke about, the same as on the daily chart I just spoke about. Thus, from these two longer term bearish patterns, we have a primary target X3 with the bearish cat's ears pattern will be down in the 127.5 zone, and a secondary harder to reach target X4 down in the 112.85 zone, around where the shallow dark blue lower trend line is, which is currently at 114.40, and that's for the 2007 to 2022 ascending expanding wedge pattern. For the head and shoulders top, we will have an even lower primary target X5 down in the 64.20 zone, close to where sits the oldest uptrend I have on any of my 200 or so charts, and that's the 1975 to date. Yes, a half-century old uptrend, currently at 66.10. I'm not even going to give you my secondary harder to achieve target for this pattern, as it is below zero. Please, please, please bear in mind that these are very long-term charts, stretching possibly over many years, but they are still targets below these patterns above. Now, that all being said, July this year with changeover threw a major spanner in the works for such longer term patterns. The reactionary immediate countering monthly key reversal up for July went back above the purple neckline, but stopped at the 50% absolute Fibonacci line at 180.5, and just under the bright green 2023 to date upper bear channel line. It's currently 178.20. The question is posed, and it is a longer term question, is whether this was just a reactionary single month move higher or the beginning of something else. Now, once again, as in my previous commentaries, I'll continue to stick to the reactionary single month move higher, as the levels of the last few months look very much the same, and despite this, they do not look like they're forming a strong enough base, not yet, but I am prepared even now to start looking at the possibility of a new base of support, and to this I would add, I would look at what December does. There is the possibility for a monthly key reversal up there, but I'll just keep it in mind. There's one caveat to this basing higher idea, and it's one I've already mentioned. That's the bright green mid 2023 to date big bear channel, currently 129.45 to 178.20. Even with such a big reactionary move back up, we are still sitting within this big bear channel, and it does have the advantage of already having had at least the minimum 5 touches necessary to legitimize it as a bear channel. For all this discussion, we are still dealing here with some very long-term patterns, and you should please bear that in mind. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.